SOFI update here on the 25th. Let's go over, well, there's not really a bear case. The bear case is going to be, if we miss earnings, we're going to go down. I mean, you could look at this and kind of go over something, but it doesn't really matter. If we miss earnings, we know we're going down here into probably the $6, $7 range. So we can't miss earnings. They have us on the tight leash in this market. So let's just get into the bullish counts. I'm going to go over the one that from last video and see if it's still possible. And then I'm going to introduce a new pattern that looks like it's pretty likely. So the pattern from last video was that the B wave is finished and we're just looking for a C wave higher. So I'm looking for something like this and then down like that. That is the pattern basically. The problem with this pattern and why it's becoming less and less likely is because this right here, it's a lot of chop, and you see this is an impulse move, and then we get an A, B, C move like that. We actually double bottomed, and then this looked like it was going to make another impulse move, and then it came down and broke back into the first wave. You can't have a diagonal on the third wave, so this would have to be a nested move again. It would have to be like that, and then that would be the overall third wave. So it's still possible, but the more nested moves, the more you're probably just looking at corrective waves. If this is a real impulse move, it's probably going to just be taking off, you know. It's not going to have a lot of nested moves. I know we do have earnings, and so that can completely change. If we stay in this range, if we have earnings, it's still possible, though. We could still be, you know, doing this after earnings, and it turns into a big impulse move up here, probably $8.50, $9.50, maybe even up to $11. We could even break out to double digits and go to 20 in this pattern, but it's possible. It's possible, but there's two different places that I'm looking for a breakout. It's either here or in the August earnings, and so I'm going to introduce a new pattern that I was looking at that makes a lot of sense, and that is basically we're in a triangle. All this chop is making me think that we're in a triangle. We're not getting any impulse moves very often. So a triangle would mean that we're just basically, and actually the A wave ends right here. It's kind of a weird, oh, I'm not doing that right. So the triangle would look like this. And if you do the math here too, this topped out on July 31st, December 28th, that's 5 months. So 5 months later takes us to the end of April, or the end of May, I'm sorry. So end of May, we would hit 941, gap fill here at 950. Maybe we come up here a little bit higher than that. And that would be the overall D wave. I didn't do this right. This is not supposed to be, here we go, A, B, C, D. And then we'd be looking for an E wave in July. So this is what it would look like. And overall, the only thing I don't like about this is if this is correct, then we're just looking at ABC. So A, B, C. Because I think in Elliott wave, you can't have a second wave triangle. It can only be a B wave. So we'd be looking at ABC, but we would be looking for that C wave to end potentially around $22. Still possible. So this would take a little bit of the upside away of it being a third wave, but I think this pattern's pretty likely. So if you zoom in here on lower time frames, it would just be more than likely you'd probably be looking at something like this. A, B, maybe C wave up here, and then pull back, and then 5 waves up to this area in late May, something like that. And you can see all the patterns here. So we have A, B, C, A, B, C, A, B, C. So then this would be A, B, C. This would be the big A, that, and then we would get ABC back down here into the August earnings, and then that's when we break out. Then we make a 5-wave move. Up here to 21 bucks would be the target. The only problem is that would be a C wave. And so after that, we would get a corrective move down. So that is one possibility over the next 3 or 4 months. And that kind of goes along with what I've been saying all along, that we're going to go to 850, 950, and then we're going to sell off again. And then August would be the earnings that we pump. So keep that one in mind. It's still possible that we do break out right here, but I don't like this pattern right here. It almost looks like a head and shoulders too. So it doesn't look very impulsive to me, and that's the problem. And so I favor the triangle now over the move that could potentially break out. So again, the target is going to be, if that plays out, the target's going to be somewhere around this parallel line. You have a gap fill at 950, you have a gap fill at 850. Somewhere in this area is where I'd be looking at. And you have all the moving averages. We'd be above all the moving averages, though. That would be pretty bullish. But the thing is, we've done that so many different times, and every single time we just come back down under. So I don't really put that much weight into the moving averages right now. And then on the weekly, we'd be above all the moving averages again. Doesn't matter. Look at that. Above moving averages, come back down every single time. So that's pretty much it. Those are the two patterns I see. I'm leaning towards the triangle more, but it is still possible that we break out here. And it turns into a third wave. We break out to 21 bucks. We'll find out on Monday. Let me know what you think in the comments. Like, subscribe if you're not already. And I'll keep you updated probably on Monday. I'll just keep you updated after earnings come out. We'll see how big we pop. Hopefully at least like 15, 20%. And hopefully we beat. If we beat, we should be at least going to, 850, 950 or something like that. So that's it. I will talk to you guys on Monday.